Hello again and welcome to Retirement Coffee Talk with Charisse Rivers at Zinnia Wealth. My name is Randy Cook and we are here once again to talk through some of your concerns, and maybe you're wondering about retirement, how this whole thing is going to turn out, and you don't have a person helping you yet. You haven't chosen a financial advisor. Well, let us introduce you to Charisse and how she goes about helping people in retirement. She's been doing it an awfully long time. Charisse, how are you doing it?
How am I doing it?
How are you doing it? That came out a little backwards. How are you doing today?
I'm great. I've got the Indian tan going after 4th of July. Rented a house for the family and said, come one, come all. And they all showed up and we just had a really great experience and
nice.
Just continue to build those memories. And it's what we always celebrate my dad's birthday for 4th of July because that's he's passed away now, but that's when we celebrated it. So it was just a really great family trip.
You know, the whole making memories thing, and we don't talk about that enough, and I think we should a lot on the show. I don't go to too many concerts, but we decided there's kind of a little venue not too far from where we live, and they bring in cover bands and stuff like that. So we decided we'd try it out. And we went to a Crosby, Stills, Nash & Young show. It was pretty cool. And anyway, sitting right in front of us was a woman who looked to be about 35, 40 years old, and she was there with her dad, and he's very elderly. She had to help him a lot to get into his seat and everything like that. And they played this ballad from Neil Young. It's called Harvest Moon. It's a nice little song. And they both got up and they danced the whole song. And I was just like, oh, this is it, man. This is exactly what we talk about here, is building memories in retirement. And it was just a nice moment. I really smiled. I thought about you when we were sitting there like that, because that's what we're all about here, is not only helping you with the finances and helping you build that successful retirement that you're looking for, but also, why are we doing this? It's to connect with family. It's to make those memories. And that's what it's all about. So let's talk a little bit about that, because one of the things that we worry about in retirement is that stock market. And Charisse, you and I have talked about it. The summer months are usually a little bit down. And then we've got a couple of other factors here. We got a midterm election this year. That usually adds to volatility. And then when there's a new Fed chair, that adds to a lot of volatility. So we got these three things going at the same time. But then again, on the other side, you got AI just pushing the market like crazy. The Micron report comes out. They say we got a lot more room to run. My head is spinning like I'm on The Exorcist. I don't know what to believe. Is it going to be good? Is it going to be bad? Am I being a market timer? How do you bring your clients through times like this?
You know, I've seen times like this over and over and over again, and we don't have a crystal ball. We can't predict when the market's going to go up and when it's going to go down. We know that for sure. We know it's going to go up. We know it's going to go down, and we know it's going to be sideways sometimes.
Yeah.
And we're in this uncharted territories of artificial intelligence and PE ratios not really matching what we're used to. And I always say past performance is not indicative of future results. And we very well might be going through this period in the stock market world where we're going to not be able to follow it the way we used to. And it very well could be more volatile. And, you know, we could have these sharp digs down and we can have these sharp ups. I mean, look at some of the stocks that have just really taken off over the last year that was very unexpected, and some that we weren't expecting to go down. And so not all stocks stay at the top. They don't always stay at the bottom. And trying to figure out when to buy and sell them is actually insanity.
Yeah.
And especially in the market we're in now. And so for our clients, they get to breathe while they're at Zinnia Wealth, because we have different buckets of money doing different things all the time. Our clients who have a buy and hold type of account, it's a buy and hold. You can go to Fisher Investments, they'll give you a buy and hold. Go down to the Raymond James, they'll give you a buy and hold. And you're going to have all the ups when the markets go up, and you're going to get all the downs when the markets go down. What I have learned over 20 years is clients don't really like that. They just do it because they don't know that there's another source of investing out there or another strategy. So yes, we do have some buy and hold portfolios for those people who are like, I'm okay, I can weather the storms. I'm going to keep my emotions intact. I don't need income from those accounts and so forth. So we'll put them in those types of accounts. But then we also have the active managed strategies where, you know, when markets are being bobbly, we might exit a percentage of whatever's at risk and put it into cash or cash equivalent, right? And if it keeps going down, we'll do it again. And then there's a total exit strategy type of portfolio. There's portfolios when the market goes down, you can potentially make money, which is absolutely outstanding. So if we are parked in a little bit of all these buckets, it keeps that emotional roller coaster out of sight for the client. And then you have those things that cannot lose whatsoever. So when clients know the plan, they can see it, they get their written plan, they see where their income is coming from during these bobbly times. They're just not as stressed out about it, Randy, because they know the plan. It's reviewed every year. They know where the money's coming from. Oh, it's not coming from that bobbly account. I know it's coming from these other accounts. And then a couple of years down the road, we might transition from taking income from those non-bobbly accounts to the bobbly accounts because we feel like the bobble is maybe ending. The roller coaster is probably done. Now we're moving forward, right? So that is what a financial advisor should get paid to do. Your 1% to 2% you're paying your financial advisors to do nothing except for a rebalance, to me, is absolute insanity. The future of financial planning has nothing to do with these big banks and brokerage firms are doing. It has everything to do with what we are doing. And we are replanting the seed for the financial services industry because people like it. They trust it. It's more comfortable. They understand the income plan. And the goal is at Zinnia Wealth Management is our goal is to make sure you don't run out of money. The only way you can run out of money is if you start pulling out droves and you don't follow the plan. But when you have a plan to follow, because when you're working with your employers back in the day, you had to follow a plan. You got a paycheck every 2 weeks. And if you overspent, you wouldn't be able to put food on the table for your kids. Or if you couldn't save enough money to go on a trip. So you had to come up with a plan. So we're just the financial firm that focuses on not just the investment plan, but the income plan, the foundation, the tax plan, the estate plan, you name it. You guys have all heard it. It's just not put your money in here. We're going to double your money in 10 years and just let me know when you want income. That is not what we do here. And you can absolutely have those advisors and hire them, but that's not what we do here. That's what makes us quite different.
Well, I've said this before, and I'm going to talk to all of our friends who have moved down from the snowy north. We used to have something called all-weather snow tires. You remember that? And remember the Michelin commercial with the little baby in the tire there, going through the rain, going through the snow, going through the wind, going through the fall, all that kind of stuff. You had a tire for all of that. Well, that's kind of what we talk about here on the show is building you a portfolio for all of that. Mm-hmm. The all-weather portfolio. Whatever's coming your way, let's have a strategy for it. That's what Charisse does, and that's what we'd like to show you. So give us a call, give us a look on the website, and let's sit down and have a conversation. What it is, it's a no-cost, no-obligation look at your retirement. What does that mean? That means it's a meeting to sit down and talk and say, this is what I've saved, this is what I spend each month, this is what I want to do in retirement. How can we throw this all together and make it work? 833-368-3680, 833-368-3680, or use our website, zinniawealth.com, ZINNIA wealth.com. There's a gold box there. It says complimentary retirement consultation. You can put a little information in there, and a team will reach out to you, and we'll get that conversation started. All right, so if you think about how many people are using 401ks in this country, I mean, even between the ages of 25 and 95, that's a lot of people, and there's a lot of money in 401ks. I have the figure. $50 trillion in this country is in retirement accounts, okay? In that $50 trillion, only 2% of it is dedicated to producing income. And if you think about the biggest fear of retirees, I don't want to run out of money, those two things do not go together. So, Charisse, let's talk a little bit about making our retirement paycheck here. I'm thinking about a pie shape here. You know, I've got 401k money and Roth money, and I've got savings money, and I've got this money. How much of that pie should be dedicated to making me a paycheck in retirement? Is there a hard and fast rule, or does it vary for everybody? How do you do it?
Yeah. So we are not a cookie cutter firm, and you won't get a cookie cutter answer. Okay. And it really depends on every household that comes into our office. It's one thing 20 years ago when I started this business that I didn't actually understand. I thought a retiree was a retiree, and you took your Social Security at the same time, and you just took a withdrawal from your 401k, and that was it. Boy, did I learn over 20 years how to properly plan and figure these things out, because every household turned out to be different, and I couldn't treat everybody the same based on their income, their assets, their liabilities. So you have to take inventory first. And I say that is if we know what your inventory is, meaning what is your fixed income? Like, oh, we're going to get Social Security. When are we going to get it? Do we get a pension? Do we not get a pension? Do we have cash rents? Are we always going to have cash rents? So what is our fixed income? And then we look at, what have you saved? Do you have a 401k, a Roth, a brokerage account, an IRA? And then what are our liabilities? Do we still have a mortgage? Do we have a car? What are our expenses, right? And so once we look at all of that, then we can really dissect the plan on how much income we need to build into the retirement portfolio. So if those things are not known, how in the world is the advisor going to be able to figure out how much we need to make sure is built in for income? Mm-hmm. They don't. So it's very important to learn that about. So that's part number one. So if you are somebody who has, let's say you have a $2,000 Social Security check, your spouse has a $1,000 Social Security check, so $3,000 a month. Mm-hmm. You saved $500,000 in total 401k money. You have no Roths, and you have like $100,000 in a brokerage account. And that's what you have to live on. And then you come in and say, Charisse, I have no debt. We got our car, our roof is done, our plumbing's done. We even have the insurance for our dentures in the future, right? Or whatever it might be. We got all that covered. So then we're thinking, okay, how much are your bills? Your bills are $2,000 a month. Okay, so that's $24,000 a year. Yet you have $3,000 in Social Security coming in. So you have extra $12,000 a year to spend on miscellaneous fun stuff. Mm-hmm. Yes, Charisse, that's exactly it. I said, well, how much are you doing in retirement? And do you want to do more? Because if you have $12,000 a year extra to spend on travel, and we built a plan to say, hey, let's take another $12,000 from the $600 you have saved. Should we do it? Do you want to do it? Would you do it? Are you going to be a Dave Ramsey follower for the rest of your life and never spend your money? Mm-hmm. Okay. And so we have to have those conversations, because half the people that come in here is like, oh, we're never going to spend our money on all this because we're Dave Ramsey followers. Get over it, followers. Guess what? You're in retirement. You don't have to follow a soul anymore except for God and your grandchildren. And a lot of people are like, oh yeah, I would. If we could spend $10,000 more on travel and our grandkids, we would absolutely do it. And we kind of just work backwards. So in these plans, you got to work backwards. No household's the same, because sometimes somebody will come in and they have husband and wife, $3,000 in Social Security, but their bills are $5,000 because they still have a mortgage. So I've got to come up with $24,000 more. And if you only have $500,000 or $600,000 saved, Houston, we have a problem, because it doesn't leave us a whole lot of money left over for that fun bucket. So we have to figure out, before you even retire, should you retire? Should we start working down that debt before we retire? And this is what part of planning is all about, right? Liabilities, assets, income. What do you have? Do you have to retire now? Should we work longer? Because you don't want to get into retirement and find yourself going back to a job a year later saying, gosh, I retired too soon. So we definitely want to work up a plan. It is, Randy, like you said, protected income is important, and only 2% of retirees have protected income. No wonder why the number one fear in retirement to this day is still, I don't want to run out of money. And yet you could probably spend every dollar for the next 30 years and still have a little bit money left over, right? But I think there should be a new definition. I'm afraid of running out of money. Are you afraid of running out of money? Are you afraid of just barely making it to the last day, your last breath, your last paycheck, and not having a legacy? So I think people get that a little bit confused, to be honest with you. So I think you have to define, what is running out of money? Not having a dollar to pass on, or just having just enough for you and your spouse so you never have to be a burden to your children.
Good point. You're listening to Retirement Coffee Talk with Charisse Rivers at Zinnia Wealth. If it's time to have the conversation about retirement, you got, sooner or later, we're going to have to sit down with somebody, right? And talk through the details of your retirement. What have you saved? What do you want to do? What are your bills? What are your taxes like? Do you have all of your money in a 401k and you're headed for a tax problem later in life? Okay. Everybody's different, as Charisse says all the time. Let's figure out what you need in retirement. It's not going to be the same as mom and dad. It's not going to be the same as your brother and sisters and the people at work. It's going to be specifically for you.
Yeah. So and if you have $500,000, $1 million, or more than $1 million, then our income and tax review is for you. Mm-hmm. So if you're questioning, do I have enough money? If you have 500,000 plus, $1 million plus, or even more than that, then our income planning strategies and our tax planning strategies are built for people just like you. And I would take advantage of it, because we don't know what we don't know until you come in and we shine a light on like a hole, or, hey, you could do this better. A whole, hey, you could save in taxes in the future if you do this now, or, hey, we can live on more income. Wouldn't you want to know now versus 5 years from now, 10 years from now, I'm just never knowing, I would.
Here's the number. It's 833-368-3680, 833-368-3680, or online, ZinniaWealth.com. Charisse, that is all the time that we have on this one. I will give you the last word.
Well, as usual, live by design and not by default. And we'll see you here next week.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at ZinniaWealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Charisse Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and or categories usually do not deduct transaction and or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.